Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. Some of you might be familiar with me out there by now, but if not, I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. For those of us that might be new, we do have to go over some housekeeping details about the session before we get to the presentation. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website. If you'd like to read it in full detail there, certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. All right, so again, most of us out there are likely familiar with the Q&A process. Once Rob gets through his general presentations, goes through some case study considerations, he will open it up to questions, live Q&A with the time remaining. Now, please make note that if we don't get to your question, which we never get through all the questions with the limited time in the session, please know it has nothing to do with the validity. We just only have so much time. All right, so that's all the typical housekeeping details. Now, my thoughts before introducing Rob is the Conference Board's Consumer Confidence Survey today seemed to send a concern into the market to go along with the Fed's higher for longer mantra that we were talking about last week. I'm not really sure exactly what that means, how much longer, which created a pretty rough tape today as well. And I'm just wondering, are we oversold yet? Interested to hear Rob's thoughts on that. And of course, very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, the man of the hour, Mr. Rob Roy.
Hey, Zach, how are you? Hey, everybody, and welcome to this week's TradeFinder Live. And there's my wonderful view. You can see I am back in the Dragon capsule. Long trip last night. Interesting tidbit. Flight was delayed several times, and when I finally got on the flight, it was only half full. Been a long time since I've been on a plane that was only half full. So I think that kind of goes along with what we heard today from the conference board, that consumer confidence is pretty weak. It was weaker than expected, but the key component of that Zach was talking about is the fact that the forward-looking component from consumers was so weak that it's normally only seen during recessions. And as you know, we are not technically in a recession yet. However, consumers are acting that way. At least that's what they reported to the Consumer Confidence Board in their survey. So yeah, that made the market move to the downside a bit today. Nothing really exciting at all during the day. It was a pretty ugly day from beginning to end, ugly tape as we call it. And you can see with where we close, we're a little bit oversold, not real significantly oversold, but still a bit oversold from the 10-day moving average. We'll talk about that when we get into our previous case study considerations. As you know, we had a put butterfly that we looked at back on August 22nd. And kind of felt like the eventual move in the market was going to be down here to test 420. That was such a point of resistance before. Normally, when you have something that's that strong as resistance, you get a test of it. We never really did. And perhaps we may have exited that put butterfly a little bit too soon. But again, we'll talk about that a little bit more later on. So ugly day today, still a gap between where we are and the 10-day moving average. You look at volume, and that's one thing that, gosh, I don't know if you'd say if you're bullish on the market or if you're looking for a better entry as we are for another downside trade on the SPY. The fact that volume kind of dried up today. So on that move, nothing of significance from a volume standpoint. So kind of saying that the sellers are running out of steam here is the way you would take that. And at some point, we're going to get a bit of a bounce. Now, do we get that sooner rather than later? I think is the key. We have this 5-wave impulse pattern set up with a 43% wave 4 correction here. Drop below that 38.2% level on today's move to the downside. So I still think we need to bounce up towards the 10-day moving average, perhaps even come up and fill this gap. But I felt that way a couple days ago as well. Yesterday looked like a genius. Today, not so much. So we'll see whether or not we come down and hit 420 before we bounce, or if we bounce first and then come down and hit 420. But I do feel like that 420 level needs to be tested. Too much resistance to have it not tested as support. You can see we have a couple of zigzag patterns here to the downside, and just pretty negative day in the markets in general. And yeah, this whole higher for longer thing that the Fed is talking about. Now there's all kinds of chatter that they're going to come off this 2% requirement on inflation. I heard 2.8 from some of the talking heads on the financial networks today. Some were saying they might even go to 3, but it just feels like at least the consensus is that for the Fed to get down to 2%, they're just going to have to destroy the market. And there's no real feeling that the Fed wants to destroy the equities market in order to get there. But I don't know that we have to get back down to 2%. We had talked about this months ago, that perhaps the 2% level was a bit of a pipe dream that the Fed had. And there was speculation a long time ago that to get down there, the Fed would have to create some significant damage in the equities markets. And that seems to be playing out. So I'll go through more of the SPY when we get to the case study considerations in previous trade finders. The concern here is right there, interest rates. The TNX moving up. We're now in the tap box, the time and price projection, and just a steady climb in rates. Very difficult for especially tech stocks to move to the upside. We'll look at NVIDIA, I'm sure, which was bucking the trend early in the day. It was up 5 points early in the day and then succumbed to the trading, to the downside throughout the trading day. But we'll look at it. But it's just going to be difficult for anything technology-wise to have any sort of a bounce move higher when we have this kind of a move to the upside in rates. It's kind of interesting to see this strong of a move without really a significant bounce lower. Where's the money moving into bonds? It's just not there yet. And it's hard to imagine with rates where they are that people aren't coming in and diving into bonds. And you would think, now I'm not saying that that would create a downward move in rates, but what I would think would occur is with rates moving this high, that enough money would move into the bond market. Remember, prices and yields move in inverse proportion in the bond market, that it would create kind of a sideways move, a trading range, if you will, so that we would have rates moving up with this fear that the Fed has not just one, but maybe 2 more rate hikes. So the expectations now are 1 more rate hike by the end of the year, and then maybe 1 again at the beginning of next year. Remember, it wasn't that long ago that the Fed Fund Futures was pricing in 2 rate cuts by the end of this year. And now we don't even have 1 priced in until the summer of next year. And perhaps not just the 1 more, but 2 more rate hikes. That's helping to boost rates. But why isn't money pouring into the bond market? Is there an expectation that it's going to get worse? I think that's what the bond market is telling us, that rates are going higher before people say, okay, now it's time to fly into the bond market. Then you look at the dollar, and the dollar is just moving significantly to the upside. We don't have a 5-wave impulse pattern labeled, but with this move, it's really, when you look at it, there's no real corrective move here. There's a tiny one right there. And if we look at our zigzag chart, you can see that using this indicator, we didn't even make it to the 38.2% level. So looking at that, I don't know that you really even pay too much attention to the zigzag pattern, although we could go to 106 before we stop this initial move higher. But in generalities, this is one big impulse move. That's a little scary too, because if we have this strong of an impulse move to the upside, we'll have some sort of a correction. And then in the zigzag pattern world, that means that eventually even a higher high from where we are now in the dollar. Now, the reason that this is a concern is, number one, when you have international companies that are subject to exchange rate issues with the dollar being so strong. On top of that, it signals that there is concern globally, economically, with money clearly moving into the dollar. And yes, the Fed's slightly hawkish stance, continued hawkish stance, is supporting the dollar. There's no doubt about that. But the fact that it's moving so strongly to the upside, there has to be money coming in internationally into the dollar, in my opinion. And now we look to see that we are really right at those highs back from March. Is that enough to at least give a little bit of cooling off to the dollar? We will look at, well, let's just go ahead and do it now. So I'm going to kind of change the order here, but let's look at the two metals, GLD and SLV, and see if this strong of a dollar has created an actual downside entry. And when you look at the GLD, the negative or positive, if you're looking for a downside entry, is the fact that we've had a pretty significant set of lower highs. But for a downside trade, I think we have to break 175. That's the level that I'm watching, because if we break 175, then I think we see this break below 170 pretty easily. But we're so close to it, I just don't think there's an entry right now. And if we look at the SLV on silver, you can see that we're still hanging right just below that 21 level. And we need to break that for a downside trade in SLV. So as strong, it's just mind-boggling, really, but as strong as the dollar is, we can't break these support levels on the metals. And there's, a little bit of give and take that goes through the metals. There's a safety factor that when things start to get a little bit dicey in the equities market, money moves into the metals as a safe haven, kind of what we thought would be happening in the bond market, but hasn't so far. And so that's kind of why we haven't broken these support levels, in my opinion. But something to clearly watch, because we're so close. And just like we showed a downside target on GLD, look where we would go on SLV. That's a great downside trade if we could significantly break 21. Every time we try, we don't have follow through. So we broke below it in June. We broke below it in August. We had one day there in September. So far this month, maybe we break below it again in the next couple of trading days if the dollar stays so strong, but not enough to initiate a downside trade. So I think there's a balance in the metals between the fear factor of wanting a safe haven in the metals and the offset of such a strong dollar, balancing things out. So why is that occurring in the metals sector, but not in the bond sector? That's the part that's not kind of, I talk about this, we joked about this last week on a webinar. When things become discombobulated, you expect it to move back into normal course of business, which usually happens. Things can get discombobulated for short periods of time, but not long periods of time. Normally, the correlations that exist in the market come back into being in a shorter period of time. And I think that that's going to occur. Something's going to give. Either the metals are going to break down, or the bond market's going to break down, or the dollars are going to break down. One of those things is going to happen. I think, because the three can't stay the way they are for too long of a period of time, in my opinion. Taking a look at the VIX, The key here is we're back up near the highs of 19 like we were back on the 18th of August. So every time we come down to this 13 level, that's been support on the VIX, and we bounce back up. Well, now the key is we're at an area where we have tons of consolidation and resistance right around this 18-19 level. You can see that we couldn't close above it back there on the 18th of August. We did close above 18 today, but can we get any sort of help from the VIX? Perhaps. We look at the 10-day moving average, you can see that we are a little bit, you say overbought, but we're a little bit too high on the VIX from the 10-day moving average. So it just feels like we are due for some sort of a bounce. That's what I've been looking for. I thought we started it yesterday. We got it reversed today. That was disappointing, looking for another downside entry after a really nice put butterfly trade to the downside. So if we do get a little bit of an oversold bounce in the equities market, the SPY, we get a little bit of a bounce back down towards the 10-day moving average in the VIX. Obviously, those two would coincide with each other, and it gives us an opportunity to put on another downside trade. We'll see how that ends up playing out. Looking at the rest of the markets here in the US, we have the DIA, and you're going to expect that these all are going to look pretty ugly. With the DIA, we've broken below 340, which was key, and there's really nothing here other than the fact that we're a bit oversold on the DIA as well, but there's no support again until 330. So do we come down to 330 before we bounce, or do we bounce first and then come down to 330? So kind of the same type of question that we had on the SPY on whether or not we come down to 420 first before we bounce, or do we bounce and then come down to 420? Very similar there. And then on the Qs, which had been, I think, performing pretty well considering what was been going on with rates. We broke that 360 level, tried very hard to get back there yesterday and just gave it up. This one is really spooky because when you take a look at this chart, there is a little bit of support right here. But if we can't hold this area right here, there's a big gap, and we're looking at all the way down to 320 on the Qs, and that would be one heck of a downside trade. So can we hold this area? A little bit of support there from June, but not a whole lot. It's not a great area of support, but we're a little bit oversold. And if we break below this level, pretty much where we are now, if we break much lower, let's call it 350. If we break below 350 on the Qs, I think you have a great trade all the way down to 320, and that would be ugly across the tech sector. It's not there yet, but it's awfully, awfully close. This is one I'm watching because that's just a great trade. We went so vertically up from 320 to that 350 level that if we break 350, we will come down equally as fast. That's what normally happens. There's nothing in the way. There is no resistance from where we are right now in the Qs to 320. And that would just be, that we would have to have rates continue higher and the dollar continue higher, I think, for that to occur. But both of those could easily happen. They've gone further than I thought they would now. So if they continue, then there's a great trade right there. And then the IWM here, we take a look at that, and yeah, we got more than my test that I've been looking for 180. We just went right through it. We stopped right there on 920, and then have just continued lower. And we are at an area that could provide a little bit of support here on the IWM at 175. You can see that we are a little bit oversold here. And then you can also see all of this consolidation, this congestion through the 175 level. So perhaps that's an area where we could try to hold here on the IWM without having to come all the way down and test those lows around 170 back from December of last year, March and May. But the oversold conditions can last for a period of time, but not long periods of time. So we could come a little bit lower here, but I don't think a whole lot before we need to bounce. And there's a real clean looking zigzag pattern right here on the IWM. And look where we are. We're exactly today closing at the 100% extension on that zigzag. And so perhaps this is an area the futures are trying to bounce a little bit up 7 points right now. That's nothing, as you know, and there's a long time between now and when the market opens tomorrow. But perhaps we're getting into an area where we could find a little bit of support and a bounce. But I do think that any sort of bounce here just sets up another downside trade. When you look at the IWM, there's a gap right there. And so there's, gaps in the IWM, but they always get filled. And that's kind of goes along with the AI data that we have on gaps where 94% of the time they get filled. That's not 100%, but that's awfully darn high. The key is that you just don't know exactly when. So perhaps we bounce back up, test 180 to the upside now. I've been looking for a test on the way down. Now maybe we get it to the upside and we can have another entry to the downside. So I'm looking for that. I'm hoping for that. Otherwise, the exit on the SPY put butterfly was too soon, and that would be disappointing. But the market's going to do what the market's going to do. But right at that 100% extension on the IWM gives us the opportunity that maybe we get some sort of an oversold bounce. Looking at Bitcoin, it's still hanging in there. It's right around. It's not running like it normally does in this time frame before the halving that occurs expected the first quarter of next year. Normally around 9 months before that, you start to see a rally. It's happened every time so far in Bitcoin. So far, it hasn't happened. We've had a couple of little blips there where it looked like maybe we were off and running, but we're just holding on to that 26,000 level here. We got perilously close to just breaking loose in the cryptos and especially Bitcoin when we looked like we might break that 25,000. We held it back here in June and we managed to hold it here again in September. But we're just not that far away at 26,000. So we've got this little ridge here between 25 and 26,000 that's acting as support, this barrier, if you will, on Bitcoin. And as long as we can stay above here, maybe at some point we get that beginning of that rally, but it hasn't happened yet. Is this going to be the time that whole scenario of Bitcoin rallying significantly in the past going into one of these halvings occurs, or does this break that trend? We'll find out over the next few months. It doesn't have to be 6 to 9 months ahead. I guess it could be a little bit closer to when it occurs, but you would think that rally is going to start sooner rather than later if it's going to happen at all. And we have a pretty significant set of lower highs. So we've got that descending triangle here on Bitcoin, and any sort of triangle. And I've talked about this so many times because it really is aggravating to me when you get out, you're looking around on the internet and you see these triangle patterns. And I feel like I know as much about triangles as anyone. A descending triangle does not necessarily mean a downside breakout. There's a lot of marketing around that, hey, if you find a descending triangle, it's going to break to the downside. If you have an ascending triangle, it's going to break to the upside. Not so. Any triangle can break either direction. And then, of course, the symmetrical triangle we already know can break either direction, but the other two can as well. So maybe we're setting up for this triangle breakout to the upside, but we also have to respect, because it is a triangle, you don't pick direction on a triangle. We have to respect the fact it could be a downside breakout as well, and that could bring us back. Technically could bring us back all the way back down here to that 21,000 level from January, a little test there in February, a test again in March. We could see it again if we get a downside breakout of this descending triangle. but at least it does appear, based on this pattern, that Bitcoin is going to do something of significance more than just fooling around here between 26, 27,000. After we broke below 30, we could have some sort of a significant move. And for those of you that are crypto traders, whether or not you're long or short, I think you're going to have a trade here in the not too distant future on a directional move. Let's look at a few of the international markets as well. And I think you probably can imagine that across the board, not looking too good. We can see the EWA has broken below this 22 level, which I thought was really perilous back here in August. I thought when we broke below it then, we were in real danger of coming all the way down here to below 20. And we managed to hold it, get back above 22, and there we've broken back below it. And so we're sitting right at this area that acted as support in August. Is going to act support as a support again now, or are we going to give it up this time? Start looking for a move down to 20, and I think that's a really nice downside trade too. So I think there's a lot of good-looking downside trades that are setting up. We're just a bit oversold right now, and it's hard to do that. It's hard to jump into these downside trades when we're already oversold. Looking at the Canadian market, the EWC kind of follows along with the US, and you can see we have broken below 34, but we are still, even though that was the main support, we're still in an area that has acted as support before, going back into May and August. So we're right at that level there at 33.5. If we don't hold that, then we most certainly are coming down to this level here at 32. And once again, a pretty good entry to the downside. As you can see, there's nothing between 33.5 and 32. These moves could happen really fast. So the market could get real ugly real fast if we don't have some sort of a bounce in the near future. And even if we do, we can turn and then get kind of ugly there. There's a pretty good zigzag right there, and you can see the 100% extension gets us in that area of 32, 32.41 is the exact level. Perhaps we go through that and actually come all the way down to 32, but a nice looking downward zigzag there in the EWC. So not looking too good there. The INDA, which had been the stalwart, has been the one that's been performing so well. It's kind of given up a little bit, not too ugly, not nearly as ugly as the markets that we've looked at already. And we'll try to see if we can hold in this area of around 44, which happens to be right where the 50-day moving average is. So we're below the 10-day moving average, but we haven't given up the 50-day yet on the INDA. So even though it's weakened a bit over the past 2 weeks, it's still looking better than some of the other markets. And another alert that we got out of just a little bit too early is the EWG. We had a nice trade there, but got out a little too early. And then you can see perhaps we're at an area, because we are oversold from the 10-day moving average on the EWG. And there's an area of support right here where we are at 26. Now, if we give that up, just like all the other markets, we've got these little vacuums where there's nothing in between. And so if we give this 26 level up, then we're likely coming down to 24.5, which is where we had some consolidation back in November, some consolidation here in December, and we'll likely test that again if we don't get some sort of a bounce. It does feel like the market needs to have some sort of an oversold bounce, but what happens when these negative downward moves occur in the markets, it can create a snowball effect where everything builds on itself. And you start to have these downward moves, people start to get scared, fear takes over, people take money out of the institutional mutual funds, etc. And by securities law, those institutions have to have a certain amount of cash on hand for redemptions. And if there's too many redemptions and they have to raise cash, then they sell stocks that they don't really want to sell, but they have to for the aspect of having enough capital on hand, enough cash on hand. And that's what forced selling causes. And you can see the 100% extension here on this downward zigzag on the EWG comes down to around 100 at 25.8, call it. So awfully darn close here. So maybe we're getting to a point where we get some sort of a bounce. I'm hopeful of that. I still think there's more downside to go. I have a hard time chasing these downward moves at this point when we're oversold. So I would love to see some upward bounces here to give us an opportunity to set up some better looking downside trades than chasing these oversold moves when you know you're going to be paying an extra premium, whether you're just buying puts or whatever strategy you're putting on. You're going to be paying extra premium in the options due to the fact that we're already oversold and we have some extra volatility priced into the options. So I would like to see a little bit of a bounce here into the end of this week to set up some really good looking downside trades. May happen, may not. We could get really oversold. And if we do, you can look at it like, okay, well, we missed that downward move. But think about it in a different way. I try to always look at the positive sides of things. So let's say that we continue lower on all of these charts and we get really oversold and I don't get the shorter term bounce that I'm looking for. But if we get to the point where they're that far oversold, then we have a good opportunity for an oversold bounce. So then we can put on bullish positions to take advantage of that oversold bounce pattern that will likely show up. So it's easy to say, gosh, you missed the downward move or you got out too soon on the downward move. We continued lower and you could have taken advantage of that. But you follow your rules, and chasing oversold moves or overbought moves is not something that I like to do. And you do have the other side of the coin. If we do continue lower, we get extremely oversold, we're going to get an oversold bounce at some point in time. So if we continue down, hit these support levels, then you take advantage of the oversold bounce. So it doesn't mean you've missed a trade. It just means that it might be a different trade than what you thought you were going to put on. But either way, there's going to be a pretty good trade set up here, I think, within the next week or so, whether or not it's because we're so extremely oversold, we're looking for that bounce, or if it's we bounce to the upside and now we're set up better looking downside trades. Either way, I think there's some really, really good looking trades coming up in the not too distant future. Can't tell you which of those two directions it's going to be, but I do think it'll be one of those two, and we'll have an opportunity at that point in time. So that's the international markets that we usually look at. Looking at these case study considerations, we looked at this SPY downward put butterfly here back on 8/22, and we did have this set up. I'm going to show that to you here. We had it set up in our speculative portfolio for ewotrader.com, and we have the impulse strategy, which is directionally based. We have the volatility strategy, which is triangles on the breakouts. And then we have the AI-based time strategy, which has been performing extremely well. But we did put money where our mouth is here. And we had an alert in our speculative portfolio. And the reason for that was it didn't follow all of the rules in those three primary portfolios. So if we have something that we really like, but it doesn't have all the characteristics of the rules that we share with our subscribers at ewotrader.com, our alert subscribers, then we can put it in the speculative portfolio. And you can see we had a 42, almost 42% gain here in this downside butterfly that worked out really, really well. And every one of our alerts that goes out, regardless of what portfolio it's in, has a page just like this, which gives you all the information with the entries, the exits, etc. All that stuff goes into these different alerts. And you can see we talk about the fact that we went ahead and took this off because we were oversold short term, and we had the CCI way down here in an extreme point low. We were looking for a bounce, and as I said yesterday, looked like heroes, because yesterday we did get a little bit of a bounce in the SPY. So go ahead and bringing that back to currently. There was the move yesterday, and I thought we might go up to the 10-day moving average, maybe even look at bounce and enough to fill that gap, but at least to the 10-day moving average. But we only had a 1-day bounce and then down again. So now it looks like maybe we got out a little bit too early. So yesterday you looked like heroes, and today you look like maybe you made a mistake. But as I said, you don't make a mistake. If we get oversold, then we trade the oversold bounce. So don't worry about that. You'll drive yourself nuts if you try to expect perfection out of yourself. It's impossible, and will drive you absolutely bat crazy. So here was rock that we looked at on 8/29, and we said that if we closed above 75, we would look to get in that. We did close above 75, and then we reversed and we headed back down. So if you're still following along with this one, I think it's interesting. I don't know that I would take this off yet. I do think we're oversold on the markets. We've pretty much filled this gap, not quite. We're getting awfully close to a 38.2% fib retracement. So if we get down there and we fill this gap, I think you add to this one and look for some sort of a bounce. So I don't think I would close this one out, even though it's gone back the other way. I think we look to see if there's a little more downside movement here. You can see we're not that far oversold as we are in some of the other markets we've looked at. So coming down, filling this gap, and hitting that 38.2% level could generate a bounce move. So I'd keep an eye on this one. So I wouldn't close that one out just yet. And then on DVA, we had this downside move, and we were looking for a continuation down to 92. We had a little bit of a bounce from that oversold condition, but we're right back down to where we are now. So pretty much at status quo here on DVA. So I would go ahead and stay in this one, because I do think we come down to that previous 4. That's where that 92 level came from, and fill this gap. We look at the moving averages. We're back below the 10-day moving average. So I think that one is helping, and we're doing pretty well on DVA. It's obviously nice to have some downside trades. Then we had AFLAC with the opportunity there. If it closed above 78, we would be looking at this 83 range, but we never did. So that one should have not been an entry. So I'm going to close that one off from last week. If you followed the rules, if you followed what we talked about, we never got the entry. We had to close above 78. We haven't done it yet. So perhaps you keep an eye on it. But so far, that one has not triggered. So you should not have been following that one. If you followed what we said last week, we should have had close above 78 to look long. Now you can see why we were interested in this to the long side, because it's held in there pretty well. It's still above the 10-day moving average. And this is in the defensive sector. When things get really ugly, money tends to move to things that people have to have. We have our the consumer goods that we need, toilet paper, etc., things that people have to have. Boy, did we not find out how important that was during COVID, etc. Those type of things occur, and that's where money looks to move when we have weakness in the overall market like we have now. And it's held in there really well. So it would have been an ugly trade if you did get in, but you shouldn't have gotten in because it didn't trigger. It did go up and hit 78, but it didn't close above it. And so we've held in here. Now, if you want to keep this on your watch list and see if it does break above 78, I wouldn't begrudge that. It's just time is starting to tick away. We would need to see that move happen here in the near future. So far, no entry there on that one, if you were following what we talked about. All right, so let's see if we can find a case study consideration for tonight, and then we'll open it up to the Q&A. And if I take a look at the searches, for some reason, there's actually 3 results here on the bullish impulse side. And so Fabrinet, I don't know if these are ones that we want to look at. I think maybe we want to stay on the corrective side, but I don't know what this company does, but that's pretty darn impressive considering what's occurred in the market. I'm really not too familiar with this company, but the CCI is moving up. We've got a constructive DMI, not a fantastic one, but constructive. And the oscillator is trying to move back, which is a representative of short-term moving averages. We've had decent volume along this lines. So let's just take a look at this and see what it looks like from the option side of things. Since I'm not familiar with it, oftentimes there's plenty that I'm not familiar with that do have good options. But usually if I'm not familiar with a stock, it's because it's a bit illiquid. Not this case. Plenty of liquidity here. The spreads aren't that wide, so it's not too bad. So yeah, we can keep an eye on that. And I wouldn't be looking bullish other than the fact that I think we are oversold short term. So these would be a very short term type of bounce type of trades that we're looking at. First Cash Holdings kind of goes along the lines. Gosh, that's a great looking DMI. Ooh, this looks good. This one looks much better. Let's see if well, we're in a 5-wave downside pattern, which is disappointing. Let's see what the options look like here, because the DMI looks so strong here. FCFS. We'll see what the options look like there. FCFS. Maybe we have some liquidity, maybe not. FCFS. And I'd really like to put on a downside trade tonight. I just feel like we're oversold. The spreads are too wide. Dang, see 60 cents by 240. That's disappointing. So this is kind of what usually happens on the stocks that I'm not familiar with. The spreads are just too wide. You can't do anything with that, even though I do feel like there's a good likelihood that bounces. Then Camtech, let's see what this looks like. Had one heck of a good day today, and that is definitely bucking the trend of the market with solid volume. So let's take a look at this one and see if perhaps this is something that we might want to look at. This is in a wave 3 to the upside, and it doesn't look much better than that. And it's just like this stock has no clue what's going on in the rest of the market. So let's see what CAMT looks like. This may be our case study for the week if there's any sort of liquidity in these options. So CAMT. Give us some liquidity. It's not awful. There's a little bit of spread, but this could be just the after the close type of spread. When things widen a bit after the close, that tends to happen when the markets get a bit more volatile. It's a little wider than I would like, but I feel like if we have some sort of tightening, just even a little bit of tightening in those spreads tomorrow, this could be one to trade an oversold bounce. So this is going to be our case study consideration for tonight. And remember, the case study considerations at TradeFinder are different than the alerts that we send out for our EWO Trader alert subscribers, where we send out actual alerts for entries, any adjustments and exits here. We just look for stocks that look of interest, whether it's to the upside or the downside, and then you're kind of on your own to figure it out from there. But that one looks like it wants to continue higher. So we'll see how that one plays out. So CAMT to the upside could go as high as 70. Gosh, that would be a heck of a move, but it was certainly a good move today. So as I said, I wouldn't be looking long with all the negativity that's going on in the market if I didn't feel like we were just due for some sort of at least a short-term oversold bounce. I would love to see it, set up some great downside trades. So with that, Zach, I'll turn it over to you and see if we have any questions or any stocks that folks would like to look at.
Yeah, that sounds great. And I guess we'll just have to see if camped can or can't. Sorry, I couldn't resist on that one.
Wow. Well,
So
how long were you sitting there thinking that one up?
It actually just popped it.
Oh, okay. All right. Well, yeah, that was pretty good. I like it.
Yeah, I could tell by how hard you laughed. So we'll start out with a question from Jason. Can we get a DMI reading on triple Qs, IWM, SPY, and XBI? We only do 2 symbols to start out to try to get through as many attendee questions. So we'll do triple Qs and IWM, and if we have time, we'll come back, Jason.
Okay, so basically what he's looking for is what is the DMI saying on the markets? I mean, that's generally what the question is. So if we look at the Qs, which I can understand that with where we are with rates, and as we talked about when we looked at the chart of the Qs, 360 really has to hold on the Qs. The positive, if you are long the Qs or want to be long the Qs, is the ADX is not up to 20 yet. Now we do have a crossover signal, the negative DMI, or excuse me, the negative DI directional indicator indicating that the sellers are in control. You don't really need the DMI to know that. You just can watch the little ticker go across the tape. But we are breaking above the positive directional indicator, but we got to get above this 20 level for that to trigger. So it hasn't triggered yet. Now, I would submit to you that you don't go to the downside on the Qs if you're looking at the DMI yet, if you like that, as I do, as a confirming indicator. But I can tell you this, if we get that ADX to continue up and break above 20, and we continue with these the separation between these 2 directional indicators, that's going to give us that big move to the downside that I was talking about, where we see at least 330 and probably 320 on the Qs. So I would keep an eye on this DMI. So if the ADX can break above 20, that tells us that it's pretty much we're going down towards that 320 to 330 level, but it's not there yet. It has to trigger. And when you look at that DMI, it's easy to say, yeah, but look, the ADX is moving up, good separation in directional indicators. We've broken above the positive direction. It's gonna break 20. But our subscribers, our long-term subscribers, have seen this enough, and I've pointed it out enough to know that sometimes it'll go up and get to 20 and roll over. It has to actually break it. There's plenty of room here on that move from 360 to 320, so let's let it actually trigger. So, well, I'll bring up the IWM and see what the DMI looks like there. Now that's a whole different ball game there. Now that's supportive of continued weakness in the IWM. It looked like perhaps we could find, because we're so close to that. And now let me go back to the zigzag here because this is really good. I'm glad you asked this question. When you have a zigzag that's so close to its expected target, so call it a 61.8% B wave correction, you're going to come down to the 100% extension. Then you want to know, what is the likelihood that we extend on the C wave and go to the extended fib level? That's when we look at the DMI to give us an indication. How strong is that move still? Is it running out of gas? Is it still really strong? What's the likelihood that we have an extended C wave? And if you looked at this DMI with the negative directional indicator still ticking up, the positive going down, the ADX going to the upside, that would tell you that there's a likelihood that we do go down to that 161.8% level. Now, that doesn't mean that in the interim, we don't get that oversold bounce, that we don't fill this gap. That would be, I think, if we fill this gap at 180, that's a great entry to the downside on the IWM. But as I mentioned before, we could blast right through 175 and come lower beforehand. It just feels like we need to get a bit of a bounce first. But you would look at this, and if it broke 175 with this DMI, I think you need to get in and trade that move expected down to 165. And if it does bounce after that, then you add to it. So two different viewpoints there between the Qs and the IWM on the DMI. So thanks for asking that question. All right, next, Zach.
Next up, let's go to Qualcomm. It's been a little bit since we pulled that one.
Goodness gracious. Yeah, that was, holy cow, traded that stock a lot back in the day. That would have been up there in the Google range, not quite as many times as Google. Look where we are here, though. So this ADX is saying that even though we've had kind of an ugly 2 months here on Qualcomm, the ADX has shown no love for this downward move at all. And even the negative directional indicator is coming down. So this is one where I think if you were looking for some sort of a speculative long here, you could take a shot at Qualcomm. We do have a descending triangle, so beware that that could bounce to the downside. Everything could change, and we could start lower from here. But with the fact that look how long this movement has been to the downside on Qualcomm since the beginning of August, and that entire time the ADX didn't respect that downward move. So if you're looking for a speculative trade to the long side, I think that one looks pretty good. The ADX is just saying that, okay, the stocks move lower, but there's no real strength in that downward move, and it could bounce back. Wow, what a blast from the past, and what an interesting looking chart. So now clearly, if it breaks 105, that's your stop. So you're out. So if it closes below 105, you just get out. But in the meantime, if you have some speculative money, then and want something that could take advantage of an oversold bounce in the market, there you go. There's one. That looks so good. I'm actually going to write that down so that we look at it next week and see if it bounces from this 105 level. But remember, a close below 105 is your stop and you're out. So yeah, that was a good one to look at.
Yes, indeed. And that was Risky Seeds from YouTube. So good spot there.
Yep.
Next up, I got another interesting chart for you. Let's go to EWW. Specifically, there's actually a couple requests. One from Bravo and Carol is wanting to look at 60 put option for 3/15/24, March 15th of next year.
You know, when you start looking at Mexico is so dependent on the US, right? I mean, they really truly are. And if we're going to be weak, it's hard to see any sort of bullishness in this chart. Now, when we look at this first zigzag move here, I think it didn't quite disqualify. I thought that was going to be too far and it would disqualify, but it didn't. And now we're sitting at the 100% level. And we broke below that 100% level today. And the DMI is the same thing. You really need that ADX to break above 20. If it does, then you're looking out to March of next year. I don't think you're gonna have to wait that long, Carol. I mean, really good spot here. I like this one. I think we at least go, because look where the 161.8% extension is. The more things that we can put in our favor, the higher percentage chance we have of being right, and all kind of support there at this 56 level, which is where that 161.8% level is. So if you wanted to be really super aggressive, then you would go in now. But if you want to wait for the rules, you would want to it might only take one more day, maybe 2 days, for that ADX to break above 20. See what happened here? Remember when I just talked about how the ADX can come up to 20 and roll over? There's a perfect example of it right there. See how the ADX came up? Looked like, oh, we're going to break above it, and then it rolls over. That's exactly what I'm talking about. And that's when we got this little short-term bounce. But on the other side of the coin, when you have zigzags and they go to the extended level, meaning that they go past the expected level, which was 100%, oftentimes, high percentage of the time, you test that previous fib level and then roll over. And I think that's what's going on here. So I think you've got another good one there to the downside on EWW. Now, whether you jump in now or just wait and see if that ADX breaks above 20, that would be your appetite for risk. So if you're okay with risk, then you jump in now. If you're a little more conservative based, let that ADX break up, understanding that in a day or two, you could give up some of that move lower on waiting for the ADX to break up. That's the trade-off though, right? That's the difference between being aggressive and being conservative. But gosh, we find some really good ones here. This is what makes this TradeFinder webinar so much fun, is the Q&A is amazing.
I couldn't agree more. From the numerous platforms that we're streaming to and the chat interacting there and our Zoom chat, we always get such great symbols and questions and context around it. So very informed subscriber base. But
yeah, I was going to say, clearly it means the viewers are knowledgeable, which
yes,
makes
absolutely.
it even that much more fun. And newer people that are learning, that's great too. I don't want to make it sound like it's only fun for knowledgeable. I mean, we want, part of the reason that we do this is to teach people. So I mean, it's both sides. Anyway, go ahead. What's the next one?
Another way of learning. KOS for Julie. Where's that heading?
KOS. Oh, I thought you were saying like we couldn't without. I thought you were about to give me your.
Well, I was, but I'm saving that for the next two.
Oh, okay. Energy stocks have been, the XLE has been moving lower, even as oil has stayed strong. We know that the next earnings cycle is going to be just a home run for the oil company stocks, but because the market's going down, the oil company stocks have gone down with the market. So we're just going to have to kind of wait that out until the earnings cycle comes around. But this one has decided, I'm not super familiar with Cosmos Energy. I love the name though. Not too familiar with this individual company, but it sure had a heck of a day today, up 5% on a day when the market was down. So I look at the ADX wasn't really impressed today, but the positive directional indicator did cross the negative. So the shorter term indicators were paying attention. For me, I would want to see it break above and close above 7.5. Way too much resistance right in this area. So if it breaks above 7.5, then I think it's a clear shot to 8. We had resistance back there in January, February, March, and even in April. So I would want to see it get above 7.5, and I think he got at least a move to 8, and then we'd have to wait and see if we could break above 8. Then we might really have something. There's that clean air, the racing analogy. I won't go through it again tonight because we're running out of time. But you could get above 8, then you would really be off to the races. But yeah, if I would want to see it get above 7.5, and then I think you've got a quick move to 8, and then reevaluate.
Alrighty, so I see we are at time, but I'm going to give a few things to you here. First off, what I was going to say, it wouldn't be a TradeFinder without Tesla and Amazon, so let's go with those. And then lastly, Constantine would like to see the same analysis that you gave with the DMI on the triple Qs and the IWM on the SPY, SPX to wrap things up. So if you don't mind finishing off with those three, I just also want to remind everyone else out there to please smash that like button if you haven't already. It goes a long way for us, and we appreciate your attendance. And again, if we didn't get to your question, please take that as encouragement to attend the insiders meeting when there's a 45-minute Q&A portion and a much higher likelihood of getting your question addressed there. So thank you all. It's been a pleasure as always, and back over to you, Rob.
All right, so with Tesla holding 240, Again, a rare stock that had an update today in a really, really ugly tape, as you alluded in the very beginning. But look where that wave 4 is, right at the 61.8% fib level. So here's another one. If you're looking for something long, you could take a shot here. Your stop is going to be a little lower though, and it's really clear that the stop is at 220. So we have the 61.8% fib level, the wave 4 labeled there. There's also support that was resistance going back into February. We could get a bounce and a run here on Tesla. So you could definitely take a shot here, and you're gonna have to realize that your loss window here could be from 240 down to 220. That's possible. If it breaks 220, you're out. But as long as it holds above 240, that could be a long. Note that we did have a negative cross here on the two directional indicators, even on an up day. So pay attention to that. So a mixed bag there on Tesla, a possibility there for something to the long side. So if you've got a little more stomach for risk and can handle Tesla to move into 220, you could take a shot there. Amazon has got all kinds of regulatory stuff going on now. And, you know, it's just, it harpens to the stuff in China. You hate to see this, the whole monopoly, all this. It's election time. And I think it's politicians trying to make name for themselves and creating these negative things. But you could have expected a much worse day. Well, that's today. So where's, that's yesterday. Where's Amazon's move today? It was lower today, so 125 is where we went down to today. So we're right here is where Amazon is today. So we're a little bit oversold. I feel like Amazon's kind of a hands-off right now until the noise goes away, which the noise is the regulators coming after them. I don't think it's anything more than election time job owning. I don't think that Amazon is in any danger. There's even speculation, oh, do you want to break up Amazon? And they were like, no, that's not what we're talking about. Just monopoly in some areas. So the 125 is concerning because it did break 130, and that was an area of support that it was holding. And then our next area is not here to 120. So you could see Amazon come down to 120. I feel like if it makes it to 120, then perhaps that's a buying opportunity. So the 125 area is in no man's land to me. Perhaps tomorrow it bounces right back up above 130, or perhaps it bounces all the way down to 120. But I think if you weren't in it already and you wanted to get in, you could take a shot now, but again, realize you've got risk down to 120. And then if it broke below 120, you would get out of that. So looking at the SPY and the SPX with the DMI, you can see with the SPY, it's pretty ugly from the two directional indicators. In other words, there's great separation there, and the ADX is moving up. But note, it has not gotten above 20. And that's both a good thing and a bad thing. The good thing is perhaps we are oversold and we need a bounce. And without the ADX breaking above 20, it is not triggered to tell us that there's likely so much strength in this downward move that there's more downside to come. But that could all change tomorrow. That ADX could be above 20 after tomorrow, and it is telling us that there is more downside to go. Or it could be saying that with this downward move, we are due for a bounce. And if we move to the cash index, which is the SPX, the SPY being the ETF, you're getting the exact same look there on the DMI as far as we're not quite breaking above that 20 level just yet. I'm going to try to go back up here and look at the DMI. It did break above it today on the SPY, so that kind of changes things a little bit. Noting that it just It did break above 20 in today's move, so that's not a positive for the market. I still feel like 420 is going to get tested. I would just like to see a bounce up first, but with that DMI, it's telling us that I probably am right with the 420, and it could get even worse than that. So both the SPY and the SPX look like there's more downside to come. The only question being, do we get a bounce to the upside first before it goes lower? Thanks, everybody, as always, for your time. We ran a bit over tonight, but we had a really great Q&A session. Thanks for all your suggestions. Great looking charts, as always. Really enjoy doing this. Thank you for your time. Enjoy the rest of your week. Promises to be a really a volatile week. I'm going to say that instead of interesting tonight. How about that, Zach? And Thursday night, we'll see if we've gotten that oversold bounce yet, or if we've continued